Hi, I'm Billy Keels, the host of the Going Long podcast. Every week, I'm going to be here interviewing the absolute best in the business as it relates to real asset investing, as well as real Main Street investors. We're going to be having conversations where you can listen in, and that's going to help you to continue on your path to education so that you feel much more comfortable as well as confident in investing long distance. So make sure that you go ahead and subscribe to the channel. Make sure that you're liking it as well, because that way you can get every single episode as soon as it comes out. And by the way, don't forget to leave today's episode a 5-star review. Let's go ahead and listen to today's conversation. Welcome to the Going Long podcast. We're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. I'm your host, Billy Keels. And if you've ever wanted to know what it was like to go from financial services to financial freedom, then guess what? Today is the conversation that you're going to want to listen to until the very last word, because today's guest not only started back in the financial service industries as an auditor back for a Fortune 500 company, and I'm sure she's going to tell us a little bit more about that. Also, with over 15 years of experience in financial services, she has now syndicated more than 375 doors, which has about an $18 million value, as well as been an equity partner in over 430 doors, which is more or less $28 million. So she really knows what she's talking about. She's also an adjunct professor at the New York University School of Professional Studies, as well as the principal and founder at Bedrock Real Estate Investors. It gives me great pleasure to welcome to today's show, Sonya Rocvil. Sonya, welcome to the show.
Thank you so much, Billy. Thanks for having me on.
Hey, this is really a lot of fun. You were awesome in our pre-conversation, making me laugh, and lots to bring that you're going to be bringing to today's conversation, all of experience and lots of really cool things happening. So I want to jump right into today's conversation.
Okay,
and so
great.
Starting out right with you, Sonya, as you know, we like to ask everybody here the same 5 questions and then kind of everything in between is, well, it's really up to the two of us. But to help us understand, where do you live in the United States?
So I live in New York City. I live in Brooklyn. I actually grew up in New York City all my life, but where I grew up was a little bit more suburban than when I am now in Brooklyn. I love Brooklyn a lot because it's just close accessibility to the city, lots of great food, arts and culture. And it's been great living in Brooklyn, but everybody loves Brooklyn right now, so it's become really crowded.
All right. And I think we all know where New York City is. It's a wonderful place. And I've got a special place in my heart for Brooklyn as well. Help us understand also too, Sonya, what is the most positive thing that's happened to you in the last 24 hours?
Well, it actually has been a really great 24 hours. I just launched a new business. So I joined forces with my business partner, and, throughout the years, especially the last year and a half or so, there's been so much that I've been getting so many questions on real estate investing and multifamily and how do we get started and just a whole bunch of things. So I thought, maybe a lot of information is out there. There is a lot of information that's out there, but it's kind of hard to pull it all together, especially if you're new to multifamily, you're new to real estate investing, or maybe you just want to passively invest, but you just want to be a little bit more educated. So we launched our class last night, and that was our first class, and it's really exciting to be able to share what I've learned, the different things that I've been exposed to, mistakes, and so people can avoid them. And it's been great. It's been great, and I'm excited about it.
So congratulations. Fantastic. Absolutely love that. And rather than waiting until the end, I want to know now, where can people find out about this wonderful brand new course that you just launched?
Right. So you can definitely email me or go to my website, Sonya at bedrockreinvestors.com. That's RE like real estate and investors with an S. My website is bedrockreinvestors.com. And the course itself is the High Rise Accelerator.
Awesome. Perfect. And we'll come back to that again, but I love that. So you took action to launch your site, and I want people to know right from the very beginning where they can find that. So well done. Yeah, Sonya. So listen, I mentioned a couple of things at the very beginning, right? Talking about some of the highlights. I definitely didn't tell the entire story. So I would love for you to share with the Going Long family more about your backstory. And if you could also share a couple of things like the important milestones or decisions that you made along your journey to get to where you are today.
Right. Well, one of the big things that I always tell people up front is I didn't start off in real estate at all. I actually started off my career in accounting. One of my mentors from my church actually was like, accounting is the basis of everything, of knowledge, of it's a language of business. And I was always interested in business. So that's the route that I took. And I decided to go into audit. Spent over 3 years there and got my license and realized that long term, I didn't want to be a partner. So that meant that I really needed to start looking for something else. And I was able to transition into a Fortune 500 company in financial services. I spent the majority of my career there, learned so much and met a lot of really great people there. But as with all large companies, things change, groups change, there's shuffles. And so what ended up happening was my entire group was laid off, including myself. And then I had to think about, what I was going to do next. But prior to that happening, I got bitten by the real estate bug. I had started reading a lot of books about real estate. Everybody reads Rich Dad, Poor Dad books, and it clicked. It resonated with me, but I didn't quite know how I was going to make that work with being in my regular job. So when everything happened and I didn't have that job anymore, I really realized that this is an opportunity, and an opportunity that doesn't always happen to just have a path wide open in front of you. And so it took some soul searching and, discussions with my husband and my parents and family. But, at the end of the day, everybody was supportive and I took the leap and I took the launch in. And after that, I started consuming like all things real estate. I joined the Real Estate Investor Association in New York City, run by a fantastic woman who's really about education and helping people understand. I got accepted into a program called Project REAP, which is focused on diversity in commercial real estate and exposing diverse people into commercial real estate. And then I also joined a commercial real estate investment group. And that was also really pivotal because that's where I was able to connect with a lot of like-minded people who were doing things that I was interested in. Because one of the things with getting started in real estate, the first place you think about investing is where you live because you're there. But being in New York and just seeing the prices and, where I'd have to start with this single family, and the numbers just weren't making sense to me. And so when I connected with this real estate group and, also through Project REAP, I realized that there's so much more economy of scale with multifamily, which again was going to be very hard to do in New York. But they were doing something really interesting. They were investing outside of New York. They were investing in other markets. And I hadn't really thought about how that would work. But actually, that ended up being the best thing because that's what I ended up doing after that, both passively and actively.
Wow. And so, so many different things that you just talked about, and we could go in a number of different places, but, Sonya, you and I had the exact same problem because I read Rich Dad, Poor Dad, and I was like, wow, this is the coolest thing ever. Like, this is going to be awesome. And so living in Barcelona, Spain, I started running out and I was like, oh my gosh, I'm going to get these places, blah, 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 blah. And the numbers didn't work. Like they just didn't work. I was like, but hang on a second. The book says this, but none of these numbers are penciling out. Like they just didn't pencil out. And I was like, this is just terrible. Like, what am I going to do? Cause I was same kind of thing, consuming all this content. Wow, I wanted to do all this stuff. And I was like, I can't do anything now. And a couple of people were like, well, why don't you invest in the US? You're a US citizen. I was like, well, there's the Atlantic Ocean. Have you not seen it? Right. That was going to be kind of a difficult thing. So I can relate to that, but there's a big difference. So you had gone through and now you're a point where you're out of your corporate role, you're consuming content, you wanted to do this thing, and then you come across this group and they're investing out of state. Mm-hmm. it wasn't something that came across your mind, but I guess kind of what fears did you have that were inside, that you had? Because I'm also going to make an assumption here, but when you're in a profession where everything has to be like equal and balance and checking the boxes and stuff like that. And now you can't really check the boxes because you can't see the property. What fears did you just bother?
Yeah. Well, I mean, I think that was really the number one fear. What was I going to do if I couldn't see the property? Like I couldn't just drive by on the weekend or, go by at nighttime and check it out. How was I going to actually, manage this property, being so far away? And those are some of the questions that people had for me too, when some of my investors were just like, why out of state? Like, why not, New Jersey? It's right there, And it's the same thing with in terms of price point and looking for the value, looking for where you can get the most value. And you realize that real estate is not, it's not the lone wolf game. This is a team sport, and you really have to have a team in place in order to be successful and in order to do well in it. So I think that was one of the first the hurdle of not being able to see it was the realization that just like in your corporate job, you were working on a team. You're not working by yourself in a silo. I worked in a global organization, and this organization also had people all over, and so you had to rely on that team, and you had to build a team to do that. And that's what I did. And so that was one of the key things: establishing that team and getting that footprint.
Okay, and so you mentioned two things, but the first one is. You mentioned value, and then you talked about the team. We're going to come back to the team and kind of how you have gone about doing that.
Right.
But you said you wanted to be able to get value.
Yeah.
And so how do you help your investors understand what value is to them? Like we had it in the context of value in this place where you live, which happens to be New York City, but then you didn't say the price, you said the value. So how do you help your investors get clarity around what is exactly the value?
Right. Well, when we look at deals, we look for properties where we think that we'll be able to actually increase the net income. And for commercial real estate, this is a fundamental thing in being able to drive value. The value in commercial real estate is really, it can be forced. Because it is driven by the amount of revenues that you're able to generate or the expenses that you're able to peel back. So because you're able to have more control, if you will, and for your P&L and your NOI, and your value is based on your income and not necessarily how the other place sold down the block that may have been boarded up and is in foreclosure, you can create that value. You can help to drive the value. And certainly there are things out of your control, like nobody is expecting COVID-19 to come. There are things that happen that you're not in control of everything, but the things that you can control, you can help the property appreciate.
Okay. That's awesome. So really being able to help people understand the NOI and once again, for our Going Long family, exactly what Sonya was talking about, to get to your net operating income, there are really two primary levers. Number one is how much revenue are you able to increase on the property? And that can be done from a number of different places, especially when we're talking about commercial and multifamily. And then how can you make sure that the expenses, the operating expenses, are basically right-sized or minimized if there's something that you see lots of waste. And when you increase your revenue and at the same time you can decrease your operating expenses, then really you're helping to increase the net operating income, which is a part of the valuation that Sonya is referring to. So fantastic. So thank you for helping us understand when you talk about value. And then I wanted to come back because one of the things that we know about you, at least I do, and now they're going to know, is that you have invested both actively and passively in 5 different states from New York. Yeah. And I think that is awesome. And and that means you really had to understand how to build the team. And you alluded to this before, but help us understand, Sonya, I'm a corporate citizen, right? I'm really busy and I want to invest and do this actively, or maybe I want to do it passively, but the whole team concept is something that is foreign to me as it relates to investing. I've only just done stock market and, place my bets and all that kind of stuff. I say bets on purpose. So help us understand, what are some of the keys to actually understanding and building your team?
Yeah. So, really important with that is, first of all, the property management team. So, you're going to go into a new market. Of course, you have to meet brokers, people that are going to introduce you to the property, people who are going to you're going to learn about the market from them as well. But once you acquire your asset, you have to have someone or group in place that's going to help manage the day-to-day, because you are living wherever you're living. You're not going to be able to address, the leaking toilet in the middle of the night, or, some situation that comes up with rent collections during the day. You have to have a property management team. And so, one of the things that we do is we spend time talking to different property managers, understanding that their style, understanding the type of property that you have, because not all properties are a good fit for all managers. So you may have a great manager on a certain property and they do great at it. Then you either scale up or you have a different class of property, and that's outside of what they can do. And so you have to realize that you need to pair the property that you have with the right management company. And so that's always good to have a good, relationships and build those relationships with different managers for the different types of plans that you may be executing.
So I love that, how you're talking about the different plans that you're going to execute, right? And I just want to, one of the things I love to share with people as well is, you want to talk to different property managers, just in the same way that you may like different types of food. And I always say when you go out, there's some days where you want fast food. And so you may go to whatever your favorite fast food restaurant is. Some days you want to go to a slow dining. And so you go there, and then you may want to go to a 3-star Michelin restaurant. Right. And so they all have the exact same function of serving food and provide service. But it would be really, really weird to see the greeter at McDonald's at a 3-star Michelin restaurant, or the maitre d' at a 3-star Michelin greeting you when you walk into McDonald's. And so what you're saying is exactly the same thing as it relates to property managers. There are some that are best fit and like to focus on certain parts of the market. And it's just another example. And I really appreciate that you talked about that, because when you're building your team, you want to make sure that your property manager understands how to serve your resident. Right. That's
Absolutely.
Something that's really key. Sorry, Absolutely. Did you want to add something else?
Oh, no, absolutely. I'm just agreeing with you. That's 100%.
Okay, perfect. One of the other things, when you talk about basically when you're looking into a new market, and you've talked about really making sure that there's an alignment, but are there some certain types of questions that you found can really help you to understand, as either an active or passive investor, that this could potentially be a right fit for you and your property manager that's going to be looking over the asset on a day-to-day basis?
Sure. Yeah. So, I always try to get a good sense of the size properties that they're used to managing. There are sometimes, depending on the size of the asset that you're targeting also, especially if it's under 100 units, you're going to encounter a lot of property managers that may initially really just focus on single family. And, this may be the largest property in their portfolio. Your, 50 unit may be the largest property in their portfolio. And, in some cases, that could be good if they're ready to scale, and the fact that your property is going to probably get a lot of attention. However, in a lot of cases, it's beyond sometimes what they think that they'll be able to handle. And you really want to make sure that, and understand the portfolio of properties that they are currently running. So that's one thing. The other thing is just understanding the resident base that they typically serve as well. Are they mainly, brand new property focused, shiny, like new construction, or are they willing to work with workforce housing and, a heavier value add type area and project? Also, you want to understand the cost structure, because that's going to factor in when you're doing your own projections and calculations of return. You want to understand what those costs are going to be. Some managers charge you lease up fees whenever they get a new client, a new resident for you. Some charge renewal fees. Some don't charge anything at all. It's just a flat fee. So you really need to understand that cost structure, because that's going to depend. And then also, when I have a property that I'm interested in, I'll always ask, how would you staff this property? How would you manage this property? And so, depending on, especially if it's a larger size, they may say, oh, we'd have a 1 or 2 person staff, or our rule of thumb is, X or Y. So then that will help also inform you just whether they're used to that type of property. And then also you want to know that they've taken a look at the property too. I really like touring properties with the property managers if possible, or just meeting with them and, building that relationship with them. So sometimes if I'm not able to get out there, they can go ahead of me for new properties. And we're already on the same page of what to look for.
So I want just to reiterate some of the things there, or highlight some of the things that you just said. And I want the entire Going Long family to recognize this. You didn't say to try to convince them to do what you wanted them to do. I mean, you very clearly helped us to understand it. It's really about understanding what is their cost structure. You talked to us about some of the things different things that you can be listening for, or now, Sonya, you've helped to educate us so that we can ask the questions like, how do you treat lease up fees? How do you treat renewal fees? What type of service fee structure do you have, right? Just to be a more intelligent investor is something that's fantastic. And then I love the question of, how would you manage this property? Because basically you're not telling them, but it's giving you insight as to how that particular property manager will be or has worked with other residents or other owners or other investors of your type. So it gives you really insight into how they will operate without you telling them what you want them to do, which I really like that. I really appreciate you sharing that as well. So you kind of talked about it in a little bit, because we had that in common, where there was the whole thing, like the numbers didn't exactly work.
Yeah.
And although I'm a big fan of going long and investing beyond your backyard, like that's why we're here.
Yeah.
There are some of the fears that we talked about before, but I guess ultimately, what was it? Maybe just beyond the, what was it for you that was kind of like the point that said, boom, you know what? I actually am going to go ahead and invest beyond my backyard.
Right. Well, one of the things is the people that you surround yourself with. Being around people who were already doing it also gave a lot of confidence. Like, hey, this can get done. This is what people are doing, and this is how. And they're delivering good returns. They're managing it in a professional manner. This is something that I can do too. So that was one of the key things. And I think also, having the conversations with the managers, the property managers, doing that interviewing process, you'll actually find that a lot of their clientele is actually outside of their, of the state. So I was having a conversation actually recently with a property manager, and that was another question I asked, whether they're a third party manager, or meaning that they just work with clients, or, do they also self-manage their properties? And, there's not a wrong answer, there's not but it's just good to know what's in the portfolio. We've had experiences with both and good experiences with both. But when you're asking that question about just understanding the their client base, most people are also out of town looking for deals and properties where there's a good entry point, because with real estate, you make your money on the buy. The way you buy it is really going to dictate how well you're going to be able to do. Making sure you're getting in at the right basis is really important. So having that conversation with them helps.
Okay. And that's fantastic. And just to know that there's so many people that are typically going after the same or trading, I guess what we like to say, around the same type of an asset. It's not a big surprise, especially when you go to the larger assets, right? Because then we get into the area of either syndication, or you get big financial institutions or institutional money that is going in some of the similar types of properties. Another thing that you just mentioned, you're talking about the being in a specific market, right? Or a specific location, I like to say. I happen to know that you are in one of the hottest markets in the world, right? In the southeast of the United States. Yeah. And there are lots of groups of people that are typically looking in the same location in one of the 5 states that you're investing in. Mm-hmm. So what is it that you are doing now as a syndicator to differentiate yourself, or to be able to have the best opportunity to be able to be involved in really, really hot markets or hot locations like Atlanta, something like that? Right.
Well, a lot of it is, drawing on the relationships that you have with your brokers, the relationships that you can also develop outside of your broker relationships as well. People on the ground that you may meet, other connections and contacts. Lenders are also really good contacts. But honestly, sometimes if it's really, really competitive in a market, it may be a sign that you may need to kind of fan out a little bit further and look outside of that market, or look further beyond that market, so that you're not caught up in the competitiveness.
and so I love that. So what we're going to do is exactly like when you go and you find lots of people at the party, you kind of pivot and you go somewhere else. So to your point, if it is a saturated market, when you pivot and look to go to, as I mentioned before, you're invested passively and actively in 5 different states, which is phenomenal. What are you looking for when it's time to pivot? Like, what are some of the different location indicators that help you to understand this fits with what I, Sonya Rocvil, want to do and my investors?
Right. Yeah. So a few things, that kind of led me to some of the key markets that we're already in. So it's looking at population growth. You want to see that there are people, wanting to live in the places that you're interested in. Another really huge thing is jobs. What's happening with unemployment rates and the unemployment rate trend? Last year was a crazy year because of COVID in terms of what unemployment rate looked like, but it's really the trend and how does that trend along on average with what's happening with the rest of the country, and understanding that is also really important. So it's some of those fundamentals of population and jobs are really the key things that I look for. And then for me, personally, if I know that if I have to, travel to an area, I try to find areas that I feel like I would like to be there. For example, I'm already in New York. Some markets are much, much colder than New York, have more severe winters than New York. Those are not exactly ideal markets for me personally, but they could be good opportunities. So, you have to just balance, your own personal inclination and where you can find opportunities.
And I think this is another key point, and like this comes to value. What we were talking about earlier is that everything is not just a financial return. Like sometimes it is, I live in a place where it's really, really cold. I would love to be in a place where it's warm and have a reason to go visit the property manager and make sure that I'm there for a couple of days, and I need to go have meetings with them and all these types of things. And it just so happens that it's 85 degrees and it's February, right? Like, so in those things, it's not a financial return. Maybe you're actually making less in terms of financial return, but it's giving you value from a quality of life perspective.
Right.
And which is another reason that I think we love real estate so much, right?
Yeah.
Or tangible assets, which is phenomenal. There's another thing that we didn't really talk about, but I know that it's really important for you to also to be able to give back. Right. And so that's something that is important to you. So I'd really love for you to talk about maybe some of the different things that you do from a volunteer, from a giving back perspective as well, Sonya.
Yeah. So right now I'm currently the treasurer of the Council of Urban Real Estate. This is an organization that is also focused on diversity in the commercial real estate realm for people of color and women. The organization has evolved quite a bit over the past 30 years, and I'm glad that I'm part of that history. It's been wonderful working with other board members and also connecting with our members and helping them along their journey as well, finding other opportunities within commercial real estate. So that's one of the things that I'm definitely passionate about and love doing. And then also just in my neighborhood, I'm part of a local group that was founded to just transform some unused space. And we've transformed it into a place where we can have concerts. Well, this is all pre-COVID, concerts, and local artists can perform, and it's really like a neighborhood community. And so I really enjoy doing that as well.
Fantastic. Love that you're also making time to be able to give back in ways that are fulfilling to you, to the community, and also to expanding this wonderful world of commercial real estate to include more people. So I think that is wonderful. So I guess help us understand, like, what's the future hold for you, Sonya, and for Bedrock Real Estate Investors? We know you've just launched a new learning platform, which is awesome, but maybe tell us a little bit more.
Yeah. So, I mean, ultimately what I'm looking to do is I have 2 young children, and my husband and I always think about the future, try to stay in the present, but always thinking about the future and creating, generational wealth. And that's one of the things that is really important to me and for the people that work with me and invest in our deals. And we looking to continue to grow our company, to continue to find properties, locations, and people to work with that are interested in growing along with us. And so that's what I want to be able to set up. It's funny, I tell people this, that, you go to school, or you have your degrees, and these are some things that you can't pass down to your kids. You can't pass down your professional license, and you can't pass down these things, but you can pass down assets that are producing income. And that's why it's really important to think about that. And that's some of the things that we're always thinking about when we're thinking about the future.
Yeah, and I love that. And I agree with you. And I'm sure that there are so many people that are listening to us, that are watching us, that can relate to exactly what you said. I know I had that epiphany myself when you are in a high-paid professional role, and you're like, this is awesome, and you're like, well, but my kid can't actually do anything for this role, right? So then afterwards, if you give them the opportunity to then decide on what they want to do with those assets that are helping to provide them more freedom and however they want to see that, is phenomenal. So so thank you for sharing that with us, Sonya. I appreciate that. And you know what, like, the thing is, there's these going long final 3 questions, and the thing is, I never ask the going long final 3 unless you tell me that you're ready for me to ask. So are you ready?
I'm ready.
All right, here we go. So question number 1, you started helping us understand where you are in the New York City and Brooklyn area. And I always like to bring it back to this side of the pond, because I'm over here in Europe. And so I always want to know from everyone, like, what is your favorite European city that you've either visited or is still on your bucket list to visit?
Right. Well, because it is St. Patrick's Day, I'm going to have to say that a beautiful city that I had the pleasure of visiting over 10 years ago now is in West Cork in Ireland. It was absolutely beautiful. Right along, it's a coastal city. I had a relative that got married there, and it was wonderful to go and see it. So lush and green. And the best Guinness I've ever tasted.
Yeah, the Guinness are pretty good there. Must admit. Cool. So we got a vote for West Cork, which is fantastic. And the other thing, Sonya, is you are a very successful person, and all the successful people that I know typically only make one mistake throughout their entire kind of, I get that right. I get it wrong every single time. Like I get it wrong every single time. I tell myself that. But the thing is here, look, it's really successful people. The thing is, there's lots of failure events, lots of learning opportunities, lots of these things that happen. And we want to help people to understand, like, yes, that's part of the process. But more importantly, Sonya, what one lesson would you now pay forward to the Going Long family so we can take that lesson away with the hopes that, maybe that will help us minimize a portion of the learning process?
Right. So, a lesson that I definitely learned was, make sure that you really understand an area that you're investing in. So, we talk about markets, but there's sub-markets, like the counties or neighborhood, but then there's also like micro markets. There's like just the intersection of where your property is and what's happening in that surrounding area. There was a deal that we really liked, and it was in our key market. So we've already been in this market, and so you kind of get comfortable sometimes, like you're in this market, and then as part of it, we had already done the due diligence, but we had not completed the due diligence period. In other words, our money was not going to go non-refundable or go hard yet. We had like a couple of days. Mm-hmm. One of the things on our, checklist is to look at insurance claims and loss runs. And it was taking a while for us to actually get this information. And at the end of the day, to make a long story short, there were some issues that had happened on the property. And when we took that back to our insurance provider, who was giving us the quotes so that we could, include that in our forecast and our pro forma, it completely blew up our pro forma because the cost was, triple the amount that we thought it was going to be because of these incidents. And so we decided, while we were told, you're a new owner, you could position it a different way, it's possible you'd be able to lower the expense. This was a syndicated deal. We couldn't take that risk with investor money. So we decided that we were not going to move forward. We were able to get back our deposit, but we had lost some money from, the trip out there, the fees to do the contract, those types of things. And that's the cost of doing business. But I think it was a good lesson learned, and something that I would say in advance is, try to get that information about like the any occurrences that may have happened on the property, but also just understanding that area really well, because maybe if we had understood that area just a little bit better, we would have known that it was a little bit more subject to higher incidents that could have led us to push earlier in the process to get that insurance information.
Yeah. So a couple of things that you just said, just to highlight really quickly. But number one is, really understand the area, and it's literally go down to the street, because sometimes that can change a lot. And even if you already know a market, just really go down to the street, literally street level, because depending on what submarket you're in, literally going from one street to the next can change things radically. And so I love that you said that, but you also just, everybody, Sonya just said, this is a business, right? And so especially when you're talking about syndication is a business, and you must treat it as such. If not, just treat it as such. Treat it as such. So last of the Going Long final three, Sonya, is we always like to feed the mind here before we go. So help us understand, what book would you recommend to the Going Long family today?
Right. So I'm actually, I'm just starting to read right now, 7 Habits of Highly Effective People. And I know that a lot of people are probably like, this is not a new book. Like, why didn't you read this before? It's so funny because, first of all, I've been doing audiobooks more. It's just been more efficient for me. And in the past year, I've just been able to listen to so many more books than I have read in the year before that. But sometimes you get a book and you're not ready for the lesson. And, when you're ready for the lesson, that's the right time to read it. And when I started reading it, it immediately started clicking with me. And I was like, this is fantastic. And this is what I need to learn now. And this is what I need to absorb now. So I'm excited to finish it.
Fantastic. So there's a book for Mr. Covey, and I would. It's a great book. And when the student is ready, the teacher appears, and the same thing for the book. So I completely understand that. And so, you know what, Sonya, I'm literally I can't believe how quickly time has gone. And I'm just thinking about, from the very first part of the conversation and really understanding that you are getting started from an accounting background, and you went through FSI, and then there was a big corporate event, and you could have either collapsed, and you decided that you were going to just kind of pivot and make the most of it. You talked to your husband, you talked to the people that are part of your trusted advisory, and you made the decision that you were going to move in this direction. And this group of people were telling you and helping you understand that they were investing out of state, which is crazy. And not only did you embrace that passively, now actively and across multiple states, and you are continuing to focus on an area that you specialize in, helping people to understand how they can get the most out of every single opportunity, creating the value, which is the value for themselves. And you're even doing it on an educational platform as well. So combining the real world knowledge and now helping people to understand that from a classroom perspective, which is fantastic. And I know that there's so many people that are like, oh my gosh, she lives in Brooklyn and she's, she's doing all this kind of stuff. And wow, this is awesome. And she's got all these wonderful ideas. And I just need to speak to Sonya. So help us understand, Sonya, what is the best way for the Going Long family to get in touch with you, find out more about what you're doing at Bedrock Real Estate Investors and things like that?
Well, sure. So you can always reach out to me on LinkedIn, Sonya Rocvil. You can find me there. Feel free to always sign up for our newsletter, Bedrock Real Estate Investors. You can go to my website, bedrockreinvestors.com. And always feel free to email me as well, Sonya@bedrockreinvestors.com. And on Instagram, I'm at Sonya Rocvil, and on Clubhouse, I'm at Sonya Rocvil as well.
Awesome. And I don't think we're connected on Clubhouse, so we'll have to change that, make sure that gets fixed today. So listen, we're going to include all of the ways to contact you and your team. We're going to include that in the show notes as well. And I really want to thank you, Sonya, for investing your time with me and the entire Going Long family today. So thank you very, very much.
Well, thank you so much for having me. I really appreciate the opportunity.
All right. Fantastic. I'm just going to say a couple words to the Going Long family. Once again, to the Going Long family, I want to thank you for investing your time with Sonya and I today. I mean, she left so much value. Like, wasn't that an awesome conversation? Just absolutely phenomenal. So, today you have an opportunity to make an impact on 2 to 3 other lives. Like, share today's episode with 2 or 3 other people. Be that person that is the positive influence on them. Also, too, after you do that, Sonya and I would also love to know, like, what did you think about today's conversation? What did you like? What would you like to hear more about? And leave your honest review. Like, leave an honest review. It's something that I take very seriously. I go through every single one. I want to know what you want to hear more about in the show. And we're going to continue to improve the show, continue to give it more of what you are looking for. So make sure you leave that honest review. And you know what? I'm going to be waiting for you for the very next conversation. And until then, go out and make it a great day. And thank you very much.
Wow, don't you love hearing from top-notch experts in the field? When I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long-distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.